Japan has never quite gotten over 2010. That's when an economy that had for decades been Asia's biggest suddenly became number 2. Though the changing of the guard had long been predicted, the reality of trailing China hit Japan's 126 million people hard. Now, another blow to national pride looms as South Korea and Taiwan gain on Japan, too. The Japan Center for Economic Research, or JCER, thinks South Korea will top Japanese gross domestic product in per capita terms by 2027 and Taiwan by 2028. Atsushi Tomiyama, the think tank's top researcher, cites Japan's low birth rate, aging population, weak productivity and slow embrace of digitalization as the key headwinds holding the $5 trillion economy back. Yet there could be a silver lining in all this. It could catalyze Japan into action to raise its economic game to preserve its lead. Granted, many hoped being surpassed by China in 2010 would be the wake-up call Tokyo needed. Sadly, it wasn't. No doubt, news that Asia's most advanced economy was bested by its student, China, paved the way for Shinzo Abe's 2012 to 2020 premiership. Adding insult to injury, China did it by cribbing from Tokyo's development strategy. Abe secured power by pledging a supply-side reform revolution to modernize labor markets, boost innovation and productivity and cut bureaucracy. Instead, he outsourced the job to the Bank of Japan, prodding the central bank to boost growth. When Abe did put on his reformer's hat, it was to enrich wealthy owners of stocks and real estate. Average wages stagnated, setting the stage for Korea and Taiwan, also students of Japan's development model, to show up the teacher. Will predictions like JCER's spook current Prime Minister Fumio Kishida into act? Only time will tell, but Kishida has already unveiled plans for a new capitalism that redirects the spoils of GDP to the middle and lower classes. Or as Kishida calls it, a virtuous cycle of growth and distribution. Abe went the Ronald Reagan route, giving 1980s-style trickle-down economics another try. Kishida wants to incentivize companies through tax benefits and regulatory inducements to share profits with workers. He hopes to prod CEOs to take big risks again with new research and development expenditures to devise game-changing technologies. These days, Korea's Samsung Electronics Company and Taiwan's Han High Precision Industry Company are disrupting the global economy in ways Japan Incorporated once did. Both Korea and Taiwan are embracing digitalization with greater urgency than Japan. Both economies seem positioned to churn out tech startups at a faster clip than their larger, more advanced neighbor.